just not working out. Short hedge funds have lost $22 billion in the second quarter. That is extremely unexpected for a lot of these hedge funds. Here's what's going on. There's investment managers right now calling for a drop in the S&P 500 of over 55%. 55%. At the same time, these short sellers have lost $22 billion in the second quarter of 2024 alone, just shorting tech stocks and communication services stocks. But they've also made several million shorting other parts of the market. Specifically, $7.6 billion were made shorting industrial stocks. Right? We're talking about distribution, manufacturing, you name it. And again, I'm redoing this stream because the audio quality on the last one was not good and I was having a lot of issues with it. So, also healthcare. Shorting the healthcare industry has created $6.9 billion in gains for these short hedge funds. At the same time, they lost $15 billion shorting technology stocks and $4.5 billion shorting communication services sector. A lot of the big tech right now is absolutely torching these short sellers. And all of this is in despite of a 4% gain on the S&P 500. Meanwhile, the market breadth on these stocks is smaller than ever. The number of actual stocks going up, like the Mag 7, is fewer than it has been in all of history. This is unsustainable, folks. And that is partly why hedge fund manager Harry Dent of HS Dent Investment Management is saying he believes there's going to be a 98% crash in the price of Nvidia, a 92% drop in the NASDAQ. So there may be a reason why there's $15.7 billion worth of shorts in the tech sector in one quarter alone. Again, that's just in losses. So yeah, it looks like Gintz here brings up a great comment. He says, it's slower than we thought, but it's happening in the background. And you know what I mean? I told you guys that we were going to see a massive melt up when the Federal Reserve reduced their quantitative tightening and began to ease by reducing the runoff of their balance sheet, which means that they're now selling the assets on their balance sheet much more slowly than they were several months ago. They're doing this specifically to maintain financial markets as high as possible in an election year. And there's one thing you guys got to remember. As long as Joe Biden is president, they are probably not going to allow the stock market to crash. Now, whether it happens or not before November, that's to be seen. And it may happen whether the Federal Reserve likes it or not, strictly from a black swan event. And at the same time, we just saw a former trader with a group of hedge funds get sentenced to 3.5 years of federal fuck-me-in-the-ass prison for participating in a scheme in which he manipulated the stock prices of OTC penny stocks. This is pink sheet, gray market bullshit that they were using to the tunes of hundreds of millions of dollars to pump and dump one hedge fund using their other 7 funds. So they generated $215 million worth of funds in management and performance fees, and the investors lost $215 million when these funds collapsed. These hedge funds, of course, it was a pump and dump, and they collapsed as well. So that's according to the U.S. Attorney's Office for the Central District of California, where this guy, Canadian Colin Hetherington, who was a former trader for Absolute Capital Management based out of the Cayman Islands, who managed 8 hedge funds, used 7 of the 8 to pump the 8th hedge fund. So this is basically cross-trading, spoofing, rehypothecation, over and over and over again in action, in which they fraudulently inflated the value of their stocks and in turn artificially inflated the value of the funds. So as part of the scam, they allegedly bought these micro-cap companies, these OTC firms, through these reverse mergers and manipulated stock prices through the shares in order to drive them higher. I won't get into the mechanics of how that works because I've done that in the past on this channel. I'll do it again next time. I'm trying to keep this light and quick. But they then sold those shares at their artificially inflated prices to the firm's 8 offshore hedge funds, which allowed the hedge funds to overstate their performance and net asset values by at least $440 million in a fraudulent method known as portfolio pumping. This is the very definition of a pump and dump, ladies and gentlemen. Who else do you know in the financial markets, say maybe a hedge fund or a market maker or both, who has billions and billions of dollars in securities sold, not yet purchased? I can name a few right now. But I'll leave that to you guys to speculate. Now, I'm not a financial advisor. This is not financial advice, but it looks like these hedge funds are making a ton of money by shorting the industrial sector and the not communication service, but the industrial sector and healthcare. So that could very well be a potential way to make some serious cash. Not to mention, you're looking at heavily shorted equities like AMC, GameStop, silver, gold, costs, and so on have massive runs. SLV, PSLV, GLD are seeing new all-time highs. SLV is over $30 again. And the last several times that we saw it happen, about a decade ago and a decade and a half ago, silver went from $30 to $48 rather quickly. So keep that in mind, ladies and gentlemen. Make sure you're properly hedged. We're going to be filthy fucking rich. Cheers, my friends.